Explore exactly what it takes to become a successful day trader and the power of consistency from the minds of the trading's elite. This is the Beyond the PDT podcast. Here are your hosts, Bryce, Tuohey, and Matthew Monaco.
Welcome back, traders. This is episode 11 of the Beyond the PDT podcast. I'm one of your hosts, Matthew Monaco, and in this episode, we interview Tim Bohen. Tim Bohen is one of the podcasters over at the SteadyTrade Podcast, and he's also the head trainer and trader over at StockstoTrade Pro. Tim has traded for the better part of the last 10 years and got his start from a young Tim Sykes on Twitter. Like many of the traders we interview, he has an entrepreneurial spirit and started his own business at the age of 22, working 80 plus hours a week, bringing internet to rural communities up in Michigan. After years of successfully running that company, he decided to cash out and follow his true passion, which was trading. However, even though he now can trade full-time, he has stuck to his part-time mentality, which has helped him and other traders over at StockstoTrade Pro understand what it takes to eventually move full-time as a day trader. Now, before we start this interview, I ask you to please subscribe and leave us a review. Let us know how we're doing, and it really helps our rating on both iTunes and the other podcast platforms. Aside from that, make sure you stick to the end of this podcast where Tim Bohen actually flips the script on us, asks us how our trading is going and what our goals are of this podcast. I don't want to spoil too much, so let's dive right into the episode.
Yeah, so how's it going?
Great, awesome. So
yeah, that's awesome. Yeah. Did you do any trading this week, or are you mostly focusing on teaching over at StockstoTrade?
Mostly teaching today, and then today was kind of such a choppy day anyway. KBLB was about the only thing decent, and I just never really. The last week was the good entry. I never really saw a great entry, even though it did grind higher all day. So.
Yeah, they keep putting out a lot of fluffy PRs over there with KBLB, but it's pretty nice out. So
I want to go visit them because they're actually their office is like an hour and a half from me. I'd like to drive there and visit them. So, maybe I could try on their spider silk and have them shoot me and see if it so
that'd be pretty cool.
Because that's what they make. They make some body armor out of spider silk.
Yeah, no, I've read a couple of their PRs. I don't understand it at all. Yeah, so why don't you just tell us a little bit about yourself? Yeah, who are you? When did you start trading? How's your journey evolved since then?
Yeah. So, first of all, I would like to, thank you guys for having me on. So I'll just I'm sure you'll probably do an introduction, but I'm Tim Bohen. I'm the host of the SteadyTrade Podcast, which, if you guys are watching these guys, maybe you've checked that out as well. And, I really appreciate what these guys are doing, especially connecting me with Jack Kellogg, which was one of the best interviews I think we've done in a while. But jump back. So I know you guys recently had Tim Sykes on. So, I've got kind of a long bio, but I'll get through it since I'm 75 years old these days. But so I started out actually in fourth grade. I remember looking at the financial papers. I liked looking at tickers. Now, I have no idea why. My dad, we grew up blue collar. Dad worked in a factory. This is the 80s. No internet. I had a computer, but it was an Apple II, which is, the old school Apple II, just green screen. There was no internet, no nothing. But I would always look at tickers, whether it be IBM or Apple. I grew up an Apple fanboy, or even GM or Ford. Growing up in Michigan, I would look at the big car companies and stuff. And then went all the way through high school again. Unlike you guys, I didn't have unlimited access to information at your age. I didn't have a supercomputer with 4G 50 megabit connectivity anywhere. So I had no ability to trade. Well, I had no money anyway, but even if I wanted to trade, it's not like today. I mean, I don't even know what you do in the 90s. I guess if I was some 18-year-old kid, I could look up stockbrokers in the yellow pages. I don't even know how you would even get started. Sykes figured it out in the late 90s, but I'm 10 years older than him. So, went to college for no apparent reason. Every time I think about college, I always think of, I'm assuming you've seen Fight Club, but when Tyler and the narrator are sitting there in the bathroom and they're talking about what do you do next, He calls up Dad, and he's like, I graduated from college. What do I do now? Dad's like, well, get married, So that was like college. That was college for me. I was like, I graduated, and it's like, what do you do now? Well, go to college. Well, just did nothing for 4 years. I had a lot of fun. Didn't graduate. So then started a company, an internet and computer company. This again dates me. We started out building computers. This is before the days when, obviously no online shopping. You would actually go down to the computer store and spec out your computer and someone would build it for you. So we started doing that. And then late 90s started a dial-up internet company. We were providing, we started out at 14.4 kilobps modems into a lot of small towns in Michigan. So our niche was bringing internet to underserved areas. So what we would do, AOL existed back then, Earthlink existed back then, but they were only in the big cities. So we would actually look for small communities that didn't have any other option, and then we would actually co-locate equipment in, insurance offices, auto parts stores, libraries. We would actually put our equipment in their facility so that then people in that community could dial us without paying those long distance charges. So anyway, that business matured. I started, actually had a little bit of money. We were out of the startup phase, so I didn't have to work 80 hours a week anymore. And, started saying, hey, I'd like to trade to make some money. So this is probably 2004, 2005, so at that point I was, 30 years old, going on 30. And so what do you do? Probably like a lot of people do, a lot of your listeners, a lot of SteadyTrade listeners, you turn on CNBC. So I'm like, I start buying the Jim Cramer books. I start trying to trade quote unquote real stocks and went nowhere. If I finished the year break even, I was like, wow, or maybe 1%, but long-term holding, no real volatility in any of these stocks because I thought that's what you were supposed to do. So then 2007 comes and the big, the financial crisis and extreme volatility. And I'm like, man, there's gotta be something better than buying Microsoft and waiting 4 years for it to go somewhere. So randomly, I read a lot of trading books. Randomly, Tim Sykes' book got recommended to me by Amazon. I had no idea who he was. Bought the book, read it, and learned several things. Number one, low price stocks. It seems today, looking back, funny, but I didn't even know $1 stocks even existed. Because, if you watch CNBC or you read the books, it's almost like they don't even exist. They never mention them. And I'm like, whoa, $1 stocks that go to 6 or go to 10 or go to 20. And Sykes was heavy in short selling back then. And then I was like, wow, this is something, especially 2007, 2008, when things were all over the place. So I became one of his first students. I probably, Michael Good and I were a couple of the first. So started finding real consistency then and was like, okay, wow, this is something that actually works, particularly short selling these low float stock or low price stocks. And so I did that for about 5 or 6 years, always just as a supplemental income type thing. So I'm the guy, and if you watch videos of Sykes from 10 years ago, you'll hear mentions of Tim Bohen, the part-time trader. I've always looked at trading as a side hustle, as something that you can supplement your income, something that you can pay for vacations, something that you can pay off your student debt, et cetera, et cetera, et cetera. I think of it as a skill and as something you can employ along with the other things you're doing. So, I had that business. It was a great way to make $1,000, a couple $1,000, and for me, pay to take the kids somewhere. We travel a lot. And I thought that was always the best way to trade, to grow your account, which again, you guys are focused on the PDT. Man, if you're under the PDT and you think you're going to be a freaking full-time trader, good luck. Okay. You might do it. Grattani's done it. Other guys have done it, but they're the unicorns. So in my opinion, if you're under the PDT, you got to look at a process and a methodology that allows you to make the best out of those, 1 or 2 trades a week, maybe more if you're overnighting trades. But so that's always been my mindset. And I kept that all the way up until my now joining with StockstoTrade. So since 2016, I now actually train this methodology, this kind of part-time trader mindset, which is very similar to what Sykes talks about too. He's like, hey, there's nothing good out there. Live your freaking life. Or, I always tell people, it's like, hey, especially if you've got that small account, you got a day job, then bust ass at work, make the boss happy. So next time you're in a trade, maybe, he's not on your back or whatever. So that's what I teach at StockstoTrade, as well as how to use the platform. I think that one of the things that's lacking with a lot of these software and trading systems is that educational aspect. And I do twice a day webinars. Actually, today I did 3 webinars. We went over a Japanese candlestick book. We did a 4-part series on that. We also look at potential trades, basically the whole idea, and I do it twice a day, every day. And that allows me to kind of fulfill what I want to do. I can be that part-time trader. I can trade when the best opportunities are there. And then, man, I love teaching. I love giving back. Even at my business, I used to do a lot of seminars of teaching people how to use a computer. I mean, again, I know to you guys, you're probably going to laugh, but remember, there was a time when you didn't, you weren't 6 months old and have an iPad in your hand. Okay. It was the Stone Age, but I mean, you guys probably had a phone or a tablet or a computer when you were walking. So us old people don't necessarily have that. So I've always enjoyed teaching, and what I'm doing now with StockstoTrade, with SteadyTrade, I tell you, it's the happiest and most fulfilled I've been in my professional career. So there you go. How was that 20-minute introduction?
No, that was great.
Yeah, that was awesome. I mean, you covered yourself very well there. And we love what you do over at, SteadyTrade and also StockstoTrade. Do you still run that business you were mentioning?
Nope. So actually in 2013, trading was just too attractive to me. And I tell you, it's a good and a bad thing, but the markets are crack, man. It's like, it's like you stay away from the markets for a couple days and you start getting that twitch. It's like you're jonesing to get back. And for me, the business had matured, was still making money, and it's still doing well today. So it's CMS Internet. You can Google it. They're doing really well. But I went to my business partner and I said, hey, I'm bored. Okay, we built this business. We got 20 employees. We got 10,000 customers. It's doing good things, but I'm just kind of bored. And I had fell into the trap many entrepreneurs fall into of, I was the owner. I was the business, 2 partners, me and another partner, but I had really just built myself a 80-hour a week job where I was getting calls midnight from employees, customers. And it's a common entrepreneurial mistake. And I had just kind of gotten to the point where I was bored and burned out, and trading was more interesting. So 2013, I sold out, kind of just took a little bit of a retirement for a couple years. And, again, just trading part-time, supplemental income type idea. I got a nice payout. I was happy with what I got paid out. So it allowed me to kind of take a little mini retirement. And then 2016 is when StockstoTrade came to me and said, hey, will you come on board and do these training things and podcasts and webinars and stuff? So.
Awesome. So could you talk about, how you went about your part-time trading, when you were working, those 80-hour weeks and stuff compared to, how you're doing it now? How's that different?
So what I would do, and this is always the kind of unpopular answer, but if you follow me on social media, I get up really early. And, one of the things I did back then, so you go back to pre-2013 where I had that business. Now, again, I was the owner, so I didn't have to be there at, 7 a.m. I could get there at 9 a.m. or 10 a.m. or whatever. But what I would always do, and this is what I recommend, whether you do it the night before or the morning, is I would every single day, no matter what. I'd get up at 5 a.m. back then. Now I get up at 4:30 because I'm poisoned by Jocko Willink. But back then I'd get up at 5 and I would do that research every single day. And going back to these days, so this is, basically 2007 to 2013, I was very, very short bias. My favorite setup was that, because again, back then we didn't get these multi-day squeezes we get all the time now. Back then, I mean, if you got a stock that ran for multiple days, it was unusual. You just have these early spikes and late day fades. That was my favorite setup. So what I would do, just like Sykes teaches, I'd be looking at those top percent gainers. I'd be looking at the financials. I'd be looking at the long-term chart. And if this was a crappy company with a stupid product like KBLB, and it had ran 50% the day before, I would be there that next morning, looking at the chart, figuring out where I would want to short that thing. And basically, I would write on the charts. And then most of the midday, I was working. I was taking care of customers, working with employees. But I always reserved that kind of 2 to 4 p.m. window. And if that stock I was looking at, that, again, big gainer, junky stock, was fading into the market close, was below VWAP, that was, I mean, you didn't get one every day, but back then you got a lot of them, multiple days a week. I would look to short that stock, fade it in the close, ideally hold over, cover into the gap down. So that worked really well for me because of the fact that I could do all that research before the kids got up, before the wife got up, before my phone was ringing. I mean, my phone would ring at 9 o'clock at night, but nobody's up at 5 a.m., So, you could have that focus time to plan and prepare. And then what I would always say is, back then, if my top 2 or 3 watches weren't below VWAP into the market close, I just didn't trade. I didn't short anything. Now, flash forward to today, 2019, I think very similar process, but the only thing I would tell you different is these days, I would be looking at that big gainer from yesterday above VWAP, pushing into that 2 p.m. window, because I just think, especially as a smaller, newer trader, the edge, the quote unquote edge, is on the long side. And you look at KBLB on Thursday, it closed at the market close, gapped up on Friday. KBLB closed at the high of the day on Friday, gapped up today. Those are the types of setups that and again, KBLB's been on the radar for a week, and you could do that. You could say, I'm going to go to work, and if KBLB's pushing the high of the day into the market close, that's my stock. So, and that's just today's, but I mean, that pattern repeats and repeats. So
I think it's really cool too that you, excuse me, that you have the perspective of, trading part-time, because so many people want to just jump right into this, go full-time. And it's, there is a way to do it part-time and a way to just use it as a way to supplement your income. Not necessarily not make it your entire life, but you're able to work another job while doing that. I think that's important for a lot of new people to hear.
Yeah. And I mean, someday, yeah. Again, I'm just getting to know you guys. I don't know what your goals are. I mean, yeah, someday you can get there, but damn it. I mean, you always hear that 90% fail, 90%. Well, I mean, I think that number is so high because people, I mean, the classic bringing a knife to a gunfight. Okay. If you're showing up to Wall Street, NASDAQ stocks with $1,000 account and you've watched a few webinars, I mean, that's the fucking definition of bringing a knife to a gunfight. And if you think you're going to, go full time with $1,000 account and you've watched a few webinars, I mean, man, you're at a huge disadvantage. Where if you've got that job, and it doesn't have to be a great job, but at least if you're paying the bills, maybe you got some benefits. I mean, remember, newsflash to all of you out there, Wall Street ain't giving you no health insurance. Wall Street ain't giving you no life insurance, okay? Those are things that you get from a real job. And maybe if you're young like you guys, I mean, you probably don't have health and life insurance, but maybe somebody 40-year-old is listening and they're thinking about making that leap. Man, wait till you're consistent. Wait till you know what you're looking at, and wait till your profit chart is gradually grinding up. But man, again, if you think you're going to go full time with $1,000 account and a little bit of knowledge, man, I just think you're screwing yourself, because you're putting yourself in such a, you're painting yourself into a corner, and you might do it. Okay. Everybody knows Grittani, and I freaking love Grittani. I consider him a friend, but you'll hear me call him the golden boy over and over again. Okay. He did it, but there's only one Tim Grittani, and there's a lot of dead bodies, in King's Landing when the market, the dragon of the market mowed them all down. So.
Well, and I think an important part of growing over PDT isn't necessarily taking $1,000 account, which I don't think maybe not everyone understands, that you don't take $1,000 account and grow it over to $25,000. You find that consistency, and then again, you use your other income to build up. And once you find that consistency, then you can start using bigger size with other money that you've got. Of course, there are going to be some people who are able to grow $1,000, $2,000, $3,000 account to $25,000 and make it full time, but there are other ways to do it.
Yeah, and now I would say on the flip side, I'm not trying to discourage. See, because what I want you to do, I just want you to have realistic expectations, because like you said, I totally agree. It's going to be hard to turn that 1,000 into, everybody's got the goal of 26,000, that way you're over the PDT, you got a little wiggle room. But if you can start today, grinding along, maybe little green, here and there, and you can sock away $500 a month, or whatever that is. You can take, cut your bills, cancel your Netflix, cancel your Hulu, whatever, reduce your expenses and squirrel away that money. Now you're learning, you're getting better. And then that, by the time you get that account build up through trading profits and savings, now you've got that knowledge. Now you're ready to use that size. I mean, probably the worst thing ever would be like somebody day one, their dad gives them 30 grand. Is like, hey, learn trading. I mean, man, that's almost worse than having $1,000, because you're going to go in and you're going to buy 8,000 shares of some 10-cent stock or dollar stock, and you don't know what you're doing. So yeah, I love that idea of, and the best saying is, the best time to plant a tree is 20 years ago. The second best time to plant a tree is today. So start today with your $1,000 account, but have realistic expectations.
Now, building on this, topic, what are some other things you see as a teacher on traders who come to the market, they're not prepared, and ultimately it leads them to fail? So what are just some of those mistakes that you see over and over again through your stocks to trade?
The biggest thing I see people doing is just they don't. It's amazing to me how few people will look at like a longer term chart, like a 1 year chart, okay, or a multi-year chart. And I think, what was it? I think VTIV was another OTC stock today. I mean, it was one of the biggest gainers, but that chart was an absolute disaster, nonstop downtrending. And I think that, you've got to look at that longer term chart. People look at the daily and they're like, hey, Sykes tells me, Bohen tells me, Grittani tells me, good, Roland Wolf, all these people tell me look at the top gainers. Yeah, but if you got a stock that's just a disaster downtrending, what are the odds that stock's going to continue over multiple days? So that's one of the biggest things. Is I'm just amazed how many people only look at today's chart. I mean, look at that past history. Has it ran multiple days? Has it made big moves? Is it a one and done? I call a one and done, that's like that doji candle. If this thing's done a doji 4 times in the past, what are the odds it's going to continue all day? And if you don't know what a doji candle, to the listeners, I know you guys know, but that's just that candle with that big wick, and then it ends up closing basically unchanged. I mean, as a new trader, your odds of success on a stock that does that one and done are so low. You want to look at those multi-day moves that help you, ease your entries and exits. And then the second thing, and I mean, if you listen to SteadyTrade, you probably heard me say it a million times, is people just don't have a plan. I mean, it's like, hey, this thing's up, I'm going to buy it, and hopefully I'll make some money. And they don't have a goal. A lot of people, what drives me nuts is when people catch a winner and then they end up, exiting for scratch because they don't even have a goal. you buy some dollar stock and it runs to $1.80, or let's say it goes to $2. You're up 100% on the day, and you don't even have a goal. You don't even know when you're going to exit. Then it starts fading. Then it cracks. Then it fails on VWAP. Then some hit piece comes out, and you're back to break even. And you're like, I just took 100% runner back to zero to break even because you don't have a goal. And I've seen that so many times. And then you got to have a stop. I mean, the same thing. I don't know how many people I'm like, well, what are you going to do if it doesn't work? Well, I'll stop out for a small loss. Well, what the fuck does that mean? Does that mean you bought it at $1? Does that mean 80 cents? Does that mean 70 cents? What's a small loss? Is that a dollar amount? Is it a spot on the chart? With a small account, I tell a lot of people, have a max loss. Okay. So if you've got a couple $1,000 account, you probably shouldn't be down more than $100 ever, So if that stock turns on you and you're down $100, I mean, you need to get out. I mean, but you might be thinking, oh, 200, 300, 400. I mean, in the grand scheme of things, a couple $100 isn't that much money, but you got to have an exit in mind. And if you got a small account, you got to keep those losses micro. So goals and stops, and not looking at the long-term chart are the big three, in my opinion.
Yeah, no, and I think that in terms of what you were just saying about having an actual stop, I think that makes it easier, or should make it easier for people to kind of understand when to get out of the trade too. And I think that's something a lot of new traders don't completely understand. Going back to your point where people don't have a plan to get out of their trade, the stock goes up, maybe it goes up 30% while they're in their position, and their, risk was $50 loss. That should be indication. If you're up 2 or 3 times your risk, get out of the trade. It doesn't matter if it keeps going up, and new people don't understand that.
Yeah, I mean, I think, and again, going back to that, not having a goal, I mean, it's greed. Ultimately, it's greed. But man, if you're if you're risking 20 cents, say back to my scenario of a dollar stock, you're risking 80 cents on your fail. If you're up $1, if it's $1.60, that's your 3-to-1 risk to reward. You need to get out, because your goal, under the PDT as a new trader, your goal is to be a professional profit taker. Okay. You need to take gains like crazy, because these stocks reverse quickly. And if you're up a couple $100 on a $2,000 account, I mean, that's a 10% gain in our situation in 15 minutes. You're going to, that hedge funds wait all year for that. So you got to just bank those green trades, bank them. And that's how you grow that account, because you would be amazed. And this is something I talk to people and coach people all the time is, man, you take 3, 4, 5 green trades in a row. I mean, $100, $150, $200. You're like, eh. But then you get to the end of the week, you're up $700, $800 on a $3,000 account, or even a $5,000 or even a $10,000 account. You would be amazed. And people don't want to hear that. It's unpopular opinion, but $100, $200 losses when you got a small account, they freaking add up fast. You would be blown away.
No, absolutely. I mean, I was blown away. One of our first episodes was with a guy named Tyson. He's out in Arizona, and he preaches like he wants to see his account grow like 1% a day, which when you have a $2,000 account, that's like $20 or something, a very small gain. But at the end of the year, your account is actually over like 12 times. It's grown over 12 times. So you'll be just under PDT if you just every day you just go for that small 1% gain. And I mean, the compounding there is just incredible.
It's funny you say that, because something I talk about in StockstoTrade Pro is every day. My biggest thing I preach is try and get 1% better today. Okay. Now, does that mean that, you now look at the 1-year chart? Does that mean you can read a press release and be like, whoa, this is kind of sketchy? I don't know. Does that mean that you now understand float rotation? Does that mean you understand the idea of whole dollars and half dollars or VWAP or, but the idea is just like your money account, 1%, but your knowledge account, I just ripped off Sykes, but the idea is you get a 1% better every day, smarter in your account, whatever. I mean, obviously the market's not open 365 days, but if you're 1% better every day over 365 days, that's 3,650% better. It's not 365% better. And just like in your money account, like you said, now commissions might eat you up if you're making $20 a day, but if you're making $100 a day, all of a sudden, you know, and you're going to have red days, but maybe you average out there. Maybe you got a 400 day and you lose 100. But man, yeah. And then you do that over 6 months, 9 months, or a year. And now you're over the PDT. You've built, you know, you're now way smarter. Okay. Hopefully, I mean, I'm 45 years old. I'm way fucking smarter than I was at 35. At 25, I was borderline brain dead. You know, my goal is to get, you know, and this is, I steal this from Jocko Willink, et cetera, is, you know, I'm trying to get better, faster, smarter, stronger every day. Okay. You know, I train, you know, I eat right. I try and get, I want to be the best version of myself I can be. And, you know, that reminds me of Jack Kellogg that, you know, you guys interviewed. Man, the thing that blew me away when I interviewed him was when he said, he's like, everything he does, he says to himself, how is this affecting my trading? And man, that was the biggest takeaway. That kid, his work ethic. And if you want to be successful in this, that's what you got to be. And just try and get that 1% better every day. And if you learned about something today, you know, how to look for a 424B, how to know if there's warrants, man, that's that 1%. And you compound that over a year, 2 years, 3 years, and all of a sudden you're creeping up into that 10% that succeed.
Absolutely. I mean, in the words of Sykes, Jack moved to the fucking Midwest, you know, bumfuck nowhere for trading though. But like, I mean, for some people, like that's what it takes. That's the dedication you need. He physically got up and moved so that way he could focus his entire day around trading, and he's become successful because of it.
Hey, in Michigan, 9 months out of the year, you basically don't want to go outside. You know, it's like, I mean, if you're in San Diego, you know, you got the beach, you got the ladies, you got the bars. There's all kinds of stuff to do. You know, in Michigan, it gets dark at like 5 o'clock and it's 5 degrees outside. You might as well be watching webinars and DVDs because you got nothing else to do.
Definitely. So you've talked a lot about growing a new account, but for you personally, if you were to just be placed with a $2,000 account, how would you go about growing that every day? What would you focus on to, you know, eventually make it over the PDT?
Oh, great question. What I would do is, you know, biggest thing, and I tell everybody this, is focus on earnings season. You know, earnings season is 5 to 6 weeks, 4 times a year. That's damn near half the year. And, you know, you can trade with a small account. You can trade $10, $20 stocks. I mean, if you catch an earnings winner, these stocks, I mean, during earnings season, you'll see $10 stocks go to 15, you know, $10 stocks go to 13. That's big percent gains. And I mean, if you've got 100 shares of a $10 stock and it goes up $3, that's a good day with a $2,000 account. So I tell people, focus on earnings season. Look at those long-term charts, though. I mean, it's got to be a stock that spiked on earnings in the past. Don't be looking to just buy any stock with earnings. And then the other thing I would tell people is, you know, look at what Jack is doing right now. These OTC gappers, these multi-day, multi-week breakouts, they're working. Now, you don't get one every day. You got to wait. Sometimes you go a week and there's none. But those setups are working. And you know, again, if you're under the PDT, you can only trade so much anyway. So earnings season, OTC breakouts, and then I just like normal, or I should say, I love the low float stocks that, you know, one of the favorite set. Now, these are dangerous. Okay, you got to be careful with the low floaters. But, you know, WKHS last week was the most recent great example. Okay, last week, Wednesday, like the 8th or the 9th, if you're watching this, May 8th or 9th. So it had a lot going on. You know, Trump tweet, their electric cars. They're supposedly moving into some GM factory in Ohio. And it's a kind of a lower float stock. Now, it's not like a true micro float, but look at that chart pattern. I think on the 8th or the 9th, that stock spikes early on news, held all through midday, consolidated around VWAP, and then that volume came in at 2 p.m. That is a setup you got to look at. And that stock went from 80 cents the next morning, it went to $5 in pre-market. Now, it came all the way back, but you'd have realistic expectations and you'd be selling on that way up. But those are the ones to look for. That's basically the inverse of what I was trading back when I was a beginner. So flip that chart up on WKHS, and that was the late day short I would look at. That big spiker consolidated and then broke below VWAP. You'd short that. Now we're in, before this week, and I still think we're in a crazy bull market. There's a lot of appetite for stock out there right now. But that WKHS, if you can wait for those, there was only one last week. But if you caught that thing for $1 or $2 or $3 a share with a $2,000 account, there's your 10% on the week or your 20% on the week. So those three.
So those are what you'd focus on for new traders. What about yourself? What do you currently focus on in your trading?
Very, very similar. My favorite is those float rotating. Now these are dangerous, and I kind of try and coach the little guys to stay away from these, but I love those, those 2 million float stocks. I mean, like BPTH was obviously the biggest one, a couple months ago, went from like 4 to 72. Okay. Now you're never going to catch that whole move, but back then, this is kind of going back to earlier in the year. I mean, if we had like 3 or 4 times a week, we'd have these low float stocks trading 50, 60 million shares a day when they've got a 2 million float and everybody wants to short them. I think they're really easy to chart, and that's my favorite play because you get that early move. Typically, you get that hard spike in pre-market, then you get that pull, and then you'll get a midday spike, and you can buy that high a day and risk on a fail. And then, again, that late day window, I love it when these low floaters, when you get 10 times float rotation, 20 times float rotation, a 2 million float stock trading 40 million shares, and quote-unquote everybody says it's a piece of crap. I love that inverse short seller trade. When everybody's talking short this 300% runner trading 1,000 volume, those are the ones that blow people up, and those are the ones that you can catch multi-dollar moves. So that's my favorite setup.
So now, aside from Steven Johnson, I think the thing you hate the most is shorting a low float day one runner. So I was kind of hoping you could give us a little rant about that.
Well, it's one of those things I joke about, and I actually did like a YouTube video. It's so tempting. I did a video last year on ticker symbol I. This stock was like, go back to 2018, look at this chart. I think it had like one red day in like 4 months, but everyone was like, oh, it's such a juicy short. And it's so tempting, and it's like burning your hand on the stove. And I have burnt my hand on the stove shorting low floaters more times than I care to admit. And it's so tempting when you look at the financials. It's a joke. There's outstanding warrants. Oh, HEAR was another great example. Turtle Beach had outstanding warrants at like $4. The thing went to like 35 in a month, So when these quote unquote obvious shorts that are up on news, and I don't care how dubious the news is. If there's some sort of press release or it's in a hot sector, go back to 2017 with the crypto stocks run. DPW, TEUM, Mara, SRAX, worst companies in the world, but they would spike because they would spit out some blockchain press release. Kodak was another one. Every day we had these. But, man, when that volume is there, and when there is any kind of news and that stock's pressing the high of the day, I just think you're crazy. I don't care how tempting it is to try and short that day one low floater. It's just they work every now and then. But the biggest problem with it, when they don't work, it gets really bad really fast. And it's so hard, with that small account, if you haven't been there before, and you're looking at down 200, down 500, down 1,000, and you're like half, back to your situation of a $2,000 account, you're looking at a fucking 50% drawdown in 5 minutes. You're a deer in the headlights. You freak out. You lose it because you can't handle that fast of a move, that fast of a drawdown. And I think it's the worst thing for a new trader to do because you can't handle that emotion. The reason I coach people around it is I have been there way more times than I admit, and I never want to go back there. Okay, I will gladly miss a low float stock trading 5 million shares in pre-market. And if it craters at the open, so be it. I don't care, because I don't want to put myself in that situation where my account is half what it was in minutes. So.
Well, and even still with stocks like those that do, they run pre-market, they start dumping, they dump at the open. We're in a market now where they're just they'll come back. They'll come back, and you watch a lot of shorts blow up because of it.
Yeah, I love that 940. I call it the 945 dip and rip, and not to repeat, but it's got all those recipes, news, crazy volume, spikes in pre-market. And then you see it slam right at the open, and you don't buy there. Okay. You don't dip buy these things, but when they start stabilizing and then break that high a day, you're off to the freaking races. Bring up any of these BPTH or any of these in the past. That is, and in my opinion, not to get all Bigfoot and black helicopters, and whether or not we landed on the moon or the earth is flat, but I saw a change in like 2015, 2016, and I have no way to prove this, but I think there's a hedge fund, multiple hedge funds. There's guys with a lot of money, like big swinging dick traders that are because if you've got a $5 million account, how hard is it to squeeze a low floater with the when it's the market the entire market cap is like $10 million. So I swear, because you see it repeat, like you said, they spike in pre, they slam at the open, and then 945, they spike on volume, and then sayonara. And I think that's an algo, or it's a hedge fund, or it's just some guys with a lot of money that are like, you know what? We can control the float on these, and we can smoke these guys. So
to start wrapping this up, what's next for you? Are you working on anything big right now, with either SteadyTrade, StockstoTrade, or, your personal trading?
I'm like I mentioned, it's funny. This is the most, start a business. This, if this is, and you guys are doing that with the podcast. I tell everybody, at least try the entrepreneurial route. It is the most, especially when you're young. How old are you guys again?
21.
Perfect.
21.
You got so much. Not to clone Gary V, but you got so many opportunities to fuck shit up. Try stuff now. Take that entrepreneurial route. I did it. I was when we started in '96, so I would have been 22 when we started that internet company. And man, we slept on the floor, up all night. But man, when you're building something that is so, it's so addictive, just like trading. And as much as I enjoyed building that company, it was an amazing time. I look back, great time in my life. But man, right now, what I'm looking to do is just continue to work with StockstoTrade and StockstoTrade Pro, and ideally create as many consistently profitable traders as possible. Because man, I freaking love teaching this stuff. I did 3 webinars today, all of them 45 minutes. I've been chatting with you guys for 45 minutes. I'm doing a YouTube live in a couple hours. I love trading. I love teaching. I love, seeing guys like you that have access to this stuff that I didn't have. I couldn't Google YouTube, or I couldn't go to YouTube videos on trading. I couldn't Google day trading. What was I going to do? Get a book from the library? So take advantage of this. And man, podcasting, I love it. It's amazing how rewarding giving back is. And that's my number one goal right now is to give back as much as possible, because it's so satisfying, especially I think when you get a little bit older like me. So
awesome. That's beautiful. There's no other way to put it. You're pretty much the Gary V of trading.
I wish. It's funny. And this pisses me off about the educational system. I wish teaching wasn't such a shitty paying job, because I think I probably would have went into teaching when I went to college. But even then, I mentioned I was brain dead in my 20s. But even then, I was like, there's a big school nearby, Central Michigan University. A lot of teachers come out of there. And back then, I'm like, man, they make like 20 grand a year. I'm like, I'm not teaching, So what I love about what I do now is I can pursue my passion with trading and I can teach. I really enjoy it, and it's a blast. And I posted a quote to my Twitter today. I mean, it's like, I think the best way to get better at something is to teach it. You figure out these things and you get better by learning from even new traders. I mean, you're never done. You're never done. I don't care if you've been doing this for 20 years or 30 years. There's always something to learn. You can always sharpen that sword in some way.
We absolutely respect what you're doing. It's great to see.
Yeah. I mean, I love this conversation. This is one of my favorite conversations we've had so far. So
Me too. Yeah.
I can't wait to, get this out there. I think it's next week we're releasing this one.
So what do you, now let me push it back on you guys. What are your guys' plans?
Sure.
Kind of, because I admit, I know what you guys are doing. I've listened to the Jack podcast. That was the only one I've had time to listen to. I understand the Sykes one got a little crazy, so I got to check that one out. But what are your guys' goals? What are you looking to do? So,
Matt, you want to go first?
Yeah. So I mean, I'm studying software engineering in college right now. I'm working full time on an internship because that's what our Rochester Institute of Technology is where I go. They require all the engineers to work a full year full time before I can, graduate and get my degree. But I mean, trading wise, I discovered trading probably my freshman year of college or so. So I'm a junior technically. I mean, I started this podcast because I wanted to get beyond the PDT basically, I've been struggling for a while and it's tough trading alone. And we've talked to just some incredible people and they open your eyes to so much. And the goal is just to spread it, basically, to spread it to as many people as possible for people who are struggling in a similar position that Bryce and I were in. And, hope that we can, make them consistently profitable just through the knowledge that other people have.
Yep.
And for me, I'm also a junior at RIT. I'm going full-time co-op out in Colorado this summer, leaving in about 2 weeks or so. In terms of trading, I'd love to make it beyond the PDT, but I'm just trying to find consistency.
Perfect.
And I was losing quite a bit of money, going back to what we said earlier. I was like, oh, if I only lose $100 a day, well, I didn't respect that $100 a day, and two, I just kept losing $100 a day. So I just kind of worked on trying to find a strategy for me, and I'm hoping to finally again see some consistency. But same thing as Matt said, we started this podcast to not only introduce ourselves to new people, but to kind of help the community, people who are in the similar situations we're in. And I can definitely say that talking with people like you and the past interviewees we've had, it really does help a lot in terms of just psychology and stuff. It's helped me understand risk reward a lot better, and just the discipline needed. So yeah, really just to find consistency in my trading and see where it goes from there.
Yeah, I think back again, back to my origin story. The cool thing was, and I think it's awesome what you're doing with the podcast because it gives you a platform to network with, as you guys grow it. I mean, it's a great way for you to learn and get access to people that, if you send them an email, they might be like, whatever, I'm not going to answer this email, but these guys got a podcast. And, I think back with Sykes, I mean, Twitter was 2007, 2008. I think Twitter started in 2008, I think. But anyway, it was so much smaller then. I DM'd him and he answered, and we kind of started a friendship going back that far. And I think that's what's awesome with what you guys are doing is you can find a lot of, direct information from, guys that have been doing it a long time. So keep it up, man. I love it. So
thank you very much. Yeah.
Yeah. I loved how you turned that on us too. You were the first one ever to do that.
Yeah. Fellow podcaster, right?
Yeah. Well, exactly. Now, where are you going in Colorado?
I'll be in Boulder.
Okay, Boulder.
So a little bit between Boulder and Denver. I'm working for Ball Aerospace.
Yeah. I was hoping you were going into the wilderness, but
I'm definitely gonna make trips
Boulder's
out there.
too hippie. If I go in there and try and whack some elk around there, they'll all freak out, man.
Same. It's hippie for me.
All right. I mean, this has been awesome. Do you have anything else to say, before we sign off here?
No, again, I'd love to, if you guys are listening out there, check out SteadyTrade.com. What we're doing, we've got similar goals. What we do over there is, we're really catered towards that newer trader of, hey, how do I get started? What am I looking for in setups? what is VWAP? Why do I not want to short a day one low floater? Or how do we even break down some filings and stuff like that? So yeah, keep listening to these guys and check out SteadyTrade.com too. We're coming up on 100 episodes, I think, next week. So
that's awesome.
Oh, congratulations.
Yeah. Where can they find you on Twitter?
So I am at T Bohen everywhere. So TBOHEN on Twitter, Instagram, Facebook, everywhere. So basically at T Bohen everywhere. So
beautiful.
Perfect.
All right. That's all we
Tim,
had. Thanks for talking to us.
Thank you so much, Tim. This is a great conversation.
All right. Thanks, guys. Have a great night.
Yeah, you too, man.
Hey guys, it's Matt again, and thanks for listening to the entire episode with Tim Bohen. Now, if you have any questions, concerns, or recommendations for us, make sure you reach out to us at beyondthepdt.com, and be sure to check out our recap blog post, which comes out and highlights the important parts of this episode. Once again, thank you for listening, and we'll see you next Wednesday.